Yes, I'm back again with another amazing content as always. If this is your first time, please subscribe and turn on the bell notification icon because we make quality content, not content, every single week. So I'm sure you wouldn't want to miss out. So in this video, we're going to look at the DXY, that is the US dollar index, and how you can gain more winning trades with it. So this is actually a powerful trading technique I'm bringing your way today, so you shouldn't miss it. So get ready as we go into it. This is UCFX. Welcome back to my channel. This channel is all about helping forex traders get acquainted with the necessary information and knowledge on how to become profitable in the forex market. So if this is you interested in content like this, do want to subscribe to this channel and turn on the bell notification icon to actually get our videos anytime we upload them. And don't forget to drop in the comment section any topic that you would like us to make videos on, and we will do it as soon as possible. So use this opportunity to actually get connected to this channel while we help you in your trading journey. So without further ado, let's get into it. All right. So in this video, I'll be teaching you how to use this DXY, that is the US dollar index, to trade the USD pairs. That is pairs that actually has USD in them, such as the Euro USD, the GBP USD, the AUD USD, NZD USD, and the rest of them. So, and you will be asking, what is this DXY? DXY is a short term for denoting the dollar index. And what is the dollar index? The dollar index is an instrument that shows the strength or weakness of the dollar. So just like we have here in this trading view, you can see it. So this is the DXY. So this is the chart for the DXY. So having a knowledge of the strength or weakness of the dollar index, it will be an outstanding confluence when you are trading the pairs that has USD in them. So just like the Euro USD, the GBP USD, and the rest of them. And what do I actually mean by this? If the dollar index is bullish, just like we have here, which means the Euro USD would be bearish. So let's check the Euro USD. So this is actually the DXY, as you can see, is bullish. So let's check out the Euro USD. Where is it? Euro USD, Euro USD. So here is Euro USD. And as you can see, Euro USD has been bearish. Yeah. So, and as well, GBP USD would be bearish as well. So let's check GBP USD. So GBP USD is bearish as well. So, and pairs like the USD CHF, the USD card would be bullish. So they are actually doing the same thing as the DXY. So let's check out the USD CHF and the USD card. So here you have the USD card. So here the USD card is has been bullish as well, kind of ranging though, but it has been moving, making higher highs and higher lows. And let's check the USD CHF. And here is the USD CHF. As you can see, it has been trending upwards, although the trend is actually trying to change to bearish. So we're having a little bearish trend here. So I will still come to actually correlating the pairs, because most pairs don't actually do exactly what this DXY is actually doing. So I'm going to share a secret with you that will actually help you to actually know the pairs that will do exactly or almost exactly what the DXY would be doing. So just like I said, this will bring us to correlation. So they are pairs that are tightly correlated to the dollar index, while some are not. So we have the positively correlated ones and the negatively correlated ones. So for the ones that are positively correlated, whenever the dollar index is in an uptrend, they would as well be in an uptrend. just like we have this USD CHF and USD CAD and others. So for the negatively correlated ones, whenever the dollar index is an uptrend, they would be in a downtrend, just like we saw on the Euro USD and the GBP USD, right? So just like we saw here on the Euro USD. So it will be in a downtrend. So, but the Euro USD is Euro USD actually has a higher percentage of being negatively correlated with this DXY. That is, the DXY is an inverse of the Euro USD, although not perfectly, but it is the closest. So, what do I mean by this? Let's look at the recent price action that happened on here on the Euro USD. So, if you look back at the DXY, you will see this in an inverse. So just like you can see, as you can see here, price tapped into this inefficiency and went bearish. So if you check the DXY, you will see the inverse of this scenario. As you can see, price tapped into this area, into this inefficiency as well, although it went a little bit deeper, and then it went bullish. So this was actually what I mean by it's not actually perfectly aligned, but Euro USD is actually the closest. So we are going to use the Euro USD as a case study for this teaching. So we're going to use the Euro USD. So understanding that the DXY is bullish and apparently causing a bearish sentiment on the Euro USD, we should be looking for sells on Euro USD, right? So I'm going to break down this seemingly opportunity the Euro USD gave, I think last week. So the trade actually gave about the trade actually started somewhere from this place. It started from here down to this point. At least this will be a fair. So it gave about how many pips? About 300 pips. So I'm going to be breaking this trade down for you, so you can actually understand how you can use this DXY to act as confluence to your trading and get more winning trades. So looking at this point from a person or someone that actually understands the markets or that understand price action, you will spot this inefficiency right here. And before this inefficiency, we'll see this little green candle. So, which means we have an order block inside this area. So, and this other block actually took out these lows, as you can see. So, if you don't actually understand or know much about smart money concepts, I suggest you check out my videos on how to trade smart money concepts or how to trade the other blocks. So you can check my channel to get more of that. So looking at this trade, after this order block took out these lows, we had this inefficiency. So before price came back to this order block, just like I normally say, you need to spot liquidity. Let's go down to the H4 time frame. So on the H4 time frame, after price took out those lows, then we had this liquidity in form of equal highs. So the smart money or the institution or big institution needs to go back to mitigate this order block or tap into this inefficiency before moving their way. So they have to bring in sellers so that they can actually buy into this zone and start selling as well from the zone. So they had to create these equal highs, which is what we call liquidity. So they had to create these equal highs to bring in sellers so that they can actually buy into this place. As you can see, they actually consolidated a little bit, came down. So they grabbed the sell side of this liquidity. So they grab the sell side liquidity. And after the sell side liquidity, what next? They need to grab the buy side liquidity. But I'll not really be going into this buy side and sell side liquidity on this video. I actually made a separate video for that, and it will actually enhance your understanding of price action, because liquidity is what actually moves the forex market. So it's actually the fuel of the forex market, right? So where traders are actually going wrong, most traders or less informed traders are actually going wrong. That's where the big institution would actually capitalize on and take out the stop losses and the rest of them. So before price tapped into this other block, we had this liquidity in form of your core highs. And as you can see, if you take your Fibonacci to actually know where price is at, you will see that price is at exactly at discount zone. The price tapped nicely into this discount level, which is the 0.786 of the Fibonacci 2. So apparently the 0.681 and 0.786 are the discount levels. So everybody likes to everybody likes to sell or buy anything at discount prices. So the smart money as well know about this, so they buy or sell from discount prices, from discount levels rather. So price tap nicely into this discount level, just like I normally teach. So what else do you need to what else can you say about this? You need to start looking for your entries using the lower time frames, because every objective has actually been met. We had the other block that took out the lows, so there was a break of structure after the formation of the other block. So we had a break of structure. That's the number one thing that you actually want to see before you start trading your other block. Break of structure. After break of structure, you need to wait for price to come back to your other block after the formation of liquidity, after liquidity has been taken out. So liquidity formed and was taken out. So price came right into this inefficiency, to fill this inefficiency. So you need to as well check where price is at. If you take your fib, just like I did, you will see that price is sitting at discount price. So all objectives have actually been met. So this is where you now have to go down to the lower time frame. That is the H1, the 15 minutes time frame, to actually take your entries. But before we do that, let's look at what the DXY did to actually know if we can actually take this trade, to actually confirm our entries from this trade. So looking at from the DXY perspective, we should be seeing similar stuff. So we should be seeing similar stuff. So here on the DXY, as you can see as well, we had this we had our other block here. As you can see, we had our other block here, but it was little bit kind of stop hunt. So we still had this inefficiency. As you can see, we still had this inefficiency just like we had on the Euro USD. So where is our liquidity? Liquidity, let's go down to the H4 time frame. So here on the H4 time frame, this is actually our liquidity. Let me drag this a little bit down. So here is our liquidity in form of equal lows, or relatively equal lows. So we had liquidity here that was actually taken out, because most traders actually took their buys, probably seeing that price tapped into this other block, but price didn't actually move immediately. So if you had actually known or studied the Euro USD, let's check the day that this actually happened. This happened on the 10th of August at 1600. So let's check Euro USD. So Euro USD, um, as you can see, Euro USD. So let's take 10th of August on Euro USD. So yeah, this actually is 10th of August Euro USD. So this would actually tell you that what happened on the DXY was actually liquidity, because everything aligned perfectly here on Euro USD exactly at 10th of August. So if you have been looking at the Euro USD and you saw this in play, and you go down to the DXY to have your confirmation, you will see this same stuff as well. Just like we marked out here, you will see the same stuff, liquidity being taken out, right? You see liquidity being taken out as well. So this is what you actually see. You see price coming into this area, and you know that this is liquidity. It's actually a stop hunt to take out those traders that we are buying, using the DXY as a confluence, buying whichever pair or selling whichever pair as they are, analyzing with the DXY. So having this in mind and seeing that price has taken out this liquidity as well, so this objective has been met as well. As you can see, after the formation of this order block, we had a break of structure as well on the DXY. So we had a break of structure and we had this huge imbalance that needs to be filled. If you don't understand price imbalances or inefficiency, as long as you go and check my video I made on imbalances and inefficiency to actually understand how you can capitalize on that. So as you can see, price took out the liquidity and price tapped into this area. And after that, so this is where you'll be taking your entries from. So we're going to be using the Euro US because we have actually found out the confluence telling us that price will be going up because we had our order block, we had our break of structure, price came back, took out liquidity, and as well, if you take your fib and actually know where price is at, you would actually spot that or understand that price actually raided the discount level. So that's why I said it's not actually perfectly the inverse of the Euro USD. But if you had actually analyzed or focused on the Euro USD and come on this pair, this DXY, you would actually understand, you would actually still understand the same thing because it aligned perfectly with the time that the Euro USD came up to tap into that inefficiency. So timing is actually very necessary in this forex trading. So you need to understand and mark out your pairs that you actually want to see stuff on. Then you come on to the DXY to have a little bit of confluence, a little bit of assurance that the trade will actually go your way. So just like we saw here, price took out the liquidity, and then we need to let's go down to the Euro USD to actually finish up the breakdown because we have actually seen what we are looking for. So here in the Euro USD, just like I said, everything has been met. We need to go down to the lower time frame to continue our analysis. So let's go down to the 15 minutes time frame. Yup. So here we are on the 15 minutes time frame. So remember we have prices already at our discount level, filling up in our inefficiency. So we need to wait for price to take out the highs, that take out the lows. So this is actually the last range that we had here. So we'll be waiting. You should be waiting for price to take out the lows and then giving you a return to a lower time frame order block, just like we do for our lower time frame confirmation. But unfortunately, this price didn't actually come up or the way we would like it, or the way most smart money traders would actually like it, because price didn't give and it didn't give a bearish order block and a tap into a bearish order block. So it gave another form of price action. So when it gives another form of price action, this is where we would use another form of entry. So as you can see, price took out these lows and this space was actually supposed to act as an order block, but it failed. So this would be tagged a breaker block. So this will be tagged a breaker block. So we had a breaker block in this area. So how will you be taking your entries when you have a breaker block? So you need to spot out the last green candle that took out these lows, and that's actually where you will be taking your entries from. So looking at this is the last green candle that took out these lows. So you need to now use your Fibonacci from these highs and then to these lows to still spot out discount levels. So looking at it, you will see that price didn't actually go all the way up to tap into this discount level. But so this would actually make most traders not to take this trade. But another way you can actually take this trade, or we would have taken this trade, would be entering as soon as price tapped into this discount level on your 4-hour time frame. Using the 4-hour time frame, you would have entered at this point, and I think that would actually be a better entry rather. So if you take your fee from this high to these lows, you see that price came perfectly into this 0.786. So looking at this candle that actually closed below it, if you are taking your entry right inside that area and then placed your stop loss, let's say you are taking your entry after the close of the candle and place your stop loss just slightly above, that will be around 50 pips. And then you target lower, next lows, it would have still been a nice trade, 1 to 6. So the best entry technique that I would suggest here is taking your trades as soon as price tap into the discount level. So because the lower time frame didn't give us that perfect entry technique that we normally look for. So that's how you would actually do it. So I know I've been able to, say some few things that will actually help you to get more winning trades with this DXY. We can go on to do a little bit of backtesting, checking out how it works and suits for your trading and capitalize on it. So see you on the next video. Bye for now.